Hello and welcome to this week's ADM YouTube Grain Market Update. My name's Cameron Curry. I'm the National Head of Feed Wheat for ADM Agriculture. Thank you for joining me today. Grain markets generally lack any real direction or drive at this moment, as wheat harvest in the Northern Hemisphere nears completion. And it certainly feels as though the global grains complex is waiting for fresh input to initiate price movement in either direction. In the USA, hot, dry weather is forecast for much of the country's midsection over the next week to 10 days, which is certainly a concern for maturing crops there, in particular corn and soybeans. Crops in many of these areas have been catapulted through the final growth stages, with a likely impact on yield as a result, although this won't be fully known until crops are harvested in a few weeks' time. Generally speaking, corn stocks in the world's key exporters are lifting year on year, and so any gains seen in the US from the weather story are likely to be short-lived rather than anything bullish longer term. Meanwhile, Brazil is said to be 85% through harvesting their record second safrinha corn crop, which is expected to add weight to global grain prices when they move to export their surplus. When combined with Argentina's large crop, the USDA estimates this exportable surplus of South American corn to be around 95 million tons. European markets continue to hunt for demand of variable quality crops, with downgraded milling making its way into feed markets and competing with the likes of the UK. Encouragingly, this week, we've seen 260,000 tons of French and Romanian soft wheat trading into Egypt, and this will be a key trade flow as countries around the EU compete for demand. It's been a race to the bottom for some time now, with a state-imposed floor for Russian wheat prices clearly visible in the lineup that we saw to Egypt. So it's good to see other origins like France and Romania finally getting a piece of the action after a slow start to the season. While the conflict rages on in Eastern Europe, Russia continues to be an aggressive seller of grains, with rumours of alternatives to the Black Sea grain corridor resurfacing, as foreign ministers from Russia and Turkey are set to meet next week. It's rumoured that under this new plan, Russia will send 1 million tons of grains to Turkey at discounted prices, which will then be transshipped on to countries who most need it. Regardless of any grain deal between Russia and Turkey, exports are flying out of Russia, with a reported 5.36 million tons of wheat leaving in July and an estimated 6.12 million tons throughout the month of August, and well ahead the pace that's required to meet the USDA's target of 48 million tons for the year. From a UK perspective, harvest is roughly 85% complete nationally, with areas in the south more or less finished, while the north of England and Scotland have a large acreage still to harvest in between less than favourable weather. Yields have been generally pleasing, averaging only slightly below the 5-year average of 8.3 tonnes a hectare, again with some regional variation. East Anglia, round to the south of England, are reporting the higher yields versus the likes of Lincolnshire, where we've seen a 3% decline versus expectations. Unlike large areas of Europe, quality is holding up relatively well, given some of the weather that these crops have faced July and August, with Hagberg's the main flag currently, which is no surprise. The staggered nature of this year's harvest has given farmers ample opportunity to dry grain into stores, and at these lower prices, there's been very limited harvest pressure for movement when compared to a more normal year. Most trade estimates for UK wheat production sit within the 15 to 15.5 million tonne range, having taken into account the yield impact of the unseasonable weather. But despite this smaller than anticipated crop, last season's wheat export campaign means the carry-out or starting balance for this season has subsequently lifted. So from an overall supply perspective, the UK picture remains heavy, with a high dependence on exports at some point this season. However, at current price spreads, the UK continues to be outmuscled by cheap competition into key target destinations such as North Spain, so that surplus currently goes nowhere. The harsh reality is that UK prices would need to depreciate relative to other origins such as Poland and Germany in the region of £15 to £20 to compete, which at these lower levels is a concern for UK growers and farmer sellers. Domestic demand remains steady at these lower numbers, with many consumers taking cover for winter runs across all grains, but we'd need to see a significant pickup in demand or for the whole global grain complex to appreciate to offer any long-term support. From a technical standpoint, we remain in the middle of support and resistance on London November 23 wheat futures, with a bit of a shelf support around these current levels. Since late July, the market has developed a short-term downtrend, which is now being tested as it hit the significant long-term support level in the mid-180s. If we see numerous closes above this downtrend, then a break will be confirmed and more sideways to supportive price action is expected, with an initial target of £190 a tonne. If the market fails to break this downtrend, however, then the immediate downside target is £180 a tonne, followed by a big jump to the mid-160s. Hopefully that has been useful for you. As always, if you have any comments or questions, please do get in touch with us. We're always keen to hear feedback, and hopefully this market update has given you some food for thought for your trading going forward. Thanks very much for joining me. Take care.